I'm here with the one and only Gary Cardone. Gary, how you doing today?
Doing great. Thank you. Thank you very much, Brad. Good to
Hey,
be
thank
here.
you for having me, man. I know we had some technical issues on this end. I almost think, Gary, it wasn't on your end. I think it's this snow. I've got a sign over my shoulder that says beach house. It is not looking like a beach house right now. This is snow out here, Gary. Yeah, this is not good.
Well, we're in the 60s, and that's really cold for Florida. So we're doing okay. I'm not going to complain.
No,
No,
you're not going to complain. I'm envious right now that I can't get on that plane behind you on that table and fly down there and chill. But look, let's get this conversation started today. When did you get into this space of digital assets and investing in Bitcoin?
I started looking at it in 16. I think the price was around $300. There was so much noise around it. I think the first real audio video books I read, the Roger Ver was going around and doing his deal, and like I really got the whole premise. What I didn't like though, for 2 years was the circus, just the amount of noise around it, the infighting. I mean, this is 7 years ago. There was a lot of tribal infighting. Seems like that has not ever abated. It just continues on like a high school. And in 18, I invested. I bought some gold and bought some Bitcoin, bought a lot more gold than I did Bitcoin, and left it away. Didn't really look at it. I think my entry point was 8 grand. Didn't really think about it for 2 more years. And then I started really getting bored with my old business. I go into industries that are going through restructuring and invest money into building businesses, and that big gap that's created between new world and the old world, way I like to define it, analog to the digital universe, horse and buggy to actually a Tesla. Like look at the progress we're making. I don't believe that progress ever unwinds itself. It only continues. I mean, really basic conversations, like with a really wealthy guy 2 nights ago. He's like, "Hey, I don't really get this." And I said, "Well, look, are we going to digitize more, or are we going to go back to, Excel spreadsheets and pencils and balance sheets like that? Or are we going to do more digitization?" And, the answer is, hey, dude, we're going to absolutely do more digitization. And if you believe that, then you will get to a point of 100% digitized Earth. Well, our legacy system isn't built for tracking, tracing, accounting for digital assets. This is a pencil ledger type world we've been living in. So the whole thing moves, like everything's going to change. And it's with that background of change, my confidence level is so high here because I know what the indicators are from the old players and what the mistakes are of the new players. Just the marketing program from a decentralized asset like Bitcoin. Just look at the advertisements that are being posted today by BlackRock and Invesco and others, Fidelity. This is real marketing. This is real promotion for Bitcoin compared to the old, hey, store it on your wallet, be your own bank, kill the world, fiat dollar's going to crash. That's not a good pitch to somebody with $100 million and they're all in legacy assets, and you're telling them all their assets are going to crash, so they need to put $100 million on a wallet, a hardware wallet, and they're thinking, let's see now, this little iPod here I have, I remember my telephone used to weigh 30 pounds, and you're telling me this little ledger, this little thing, I'm going to put $100 million on it, right, and walk around? Come on. It's so unrealistic about how people handle big money. And I think that's what we've discovered, Brad, is that first 7, 8, 10 years of this product, up until very recently, it has been a bunch of small investors, really. It's not been institutional heavyweight investors. And I think that's what this ETF is about. So we're moving. People may not like the move we're making, but we're definitely going to adoption.
Well, listen, there's so many incredible things that you touched on in that response. I just want to try to pull out a few things because they were incredible. So I want people, the audience, to realize what you've done. I have a similar approach to this market all the time. I have one of the core tenets of the investing for myself. It's not investment advice for anyone listening, and nothing we say is, but one of my core tenets that I share as a strategy is I stack my pennies next to their dollars. And who are they? They are the ones that are in this space building out here, helping to create the market infrastructure that's going to exist, that exists today and beyond today. And that's exactly what you've done. You saw and identified a new market, a new industry. You saw the gap between the traditional markets and the new industry. And now you're placing your bets on what companies or projects or tokens can fill that gap and help marry the two together so we get this new digital revolution. So I just think that's a wonderful macro approach for everyone to identify with for themselves. The beautiful thing about that is that everybody may come up with a different list of what projects or companies they think can fill that void. And that's the beautiful part of everybody being an individual and doing their own research. So bringing things to where we are today, we're in a much different place today with Bitcoin. Bitcoin in 2009 and its white paper was about anti-government, anti-bank, anti-establishment, use it for money, use it for payments. This was what it was all designed to be. But as you said, today where we are, some people may not care for exactly the way things are looking so far these days. But today we see the legacy institutions coming out and getting the approval to launch these spot Bitcoin ETFs. Gary, that's not cash. That's an investment product. Let's hear your thoughts on that if we could.
Yeah, most certainly. Most certainly it's an investment product. The investor is a different category player than I think we've seen before. Look, I don't think the original people that built Bitcoin and then promoted it for the last, say, 10 years are going to be overly happy with this result. But if you want adoption, this is what adoption looks like. Unless we go to a Mad Max world, right? Like, I don't think that me having 1,000 Bitcoin and being in a Mad Max world is a really cool place to be.
No,
I'd rather have 0 Bitcoin. Thank you.
Yeah.
Look, we're not going to overrun the U.S. government and the dollar's position globally in the next 2 or 3 years. It's just not realistic. Bitcoin's not ready to do the job that their non-marketing department suggested they would do. See, Bitcoin, the entity, never promised all of these crazy utopian type scenarios. I think some of the utopian scenarios are awesome. They're beautiful concepts, and possibly I could even agree they will happen. The question is time period. When I read a time horizon, when I read Satoshi's paper, I don't see any footnotes there that says this will happen 12 days after the launch of this idea. I mean, it doesn't refer to time at all, but I'm pretty sure it ain't going to happen tomorrow morning.
Yeah.
And we're here because of a problem from decentralization. This is going to be a bit of a critical perspective, but decentralization has some real serious issues with it. One would be there is no marketing message because there's no marketing department. So guess what's going to happen now? BlackRock, Invesco are going to spend 30, 40, 50, $100 million at every rugby match, soccer match, TV show, Super Bowl match, and they're going to market Bitcoin to 406,000 ultra wealthy families and 60 million millionaires. They don't care about the rest of you guys. Okay, you can't even get into their portfolio. Okay, Fidelity is not going to offer most of you guys the opportunity to even participate with them, which offers a whole section of people. There's going to be a whole piece of the anarchists that want to do things differently. There'll be plenty of people that want to self-custody. And then there'll be other people that will feel much more comfortable having Fidelity custody their products. And then if they do something wrong, they can sue Fidelity. But they don't want to go to their own family office and go, gosh, I have 11 of my 12 seed phrases. They're in the backyard. Let me go dig them up. Okay. That's not the way a family office with $1 billion operates.
That's right.
Dude, I think this is awesome. I mean, like we didn't regulate ourselves. We created a circus here. Another problem with decentralization. There was no one to send notes to, fire, right? We had 4 different tribes all selling in a very different way. And like, that's why centralization is valuable. Centralization is very, very efficient. Decentralization is not efficient. It may be, it's not efficient in terms of pulling a bunch of data in and being able to consolidate that data. And I love the benefits of you and I being able to trade one-on-one. Like, I've got some silver. I'm not going to sell that back into a central authority, dude. I'm going to sell that to somebody that gives me a slight premium for my physical silver. Create some issues. I got 800, 900, $1 million worth of silver sitting over there. I've got security issues now. You know, there's some, no different than me self-custodying Bitcoin. I have security issues. If somebody comes in and wants to lift my silver, gets past the guns, the dogs, and the security system, they're probably going to get my silver. But I look at the silver and go, gosh, you know, is this going to bring me more utility, or should I move this into this new digital money? I don't think this gets smaller.
Yeah, I agree with you.
Don't think it gets smaller. Okay.
Yeah, this gets bigger. Yeah.
Once the drip comes, like, people forget, you know, it took Visa, MasterCard, Brett, 52 years to get 7 credit cards in everybody's pocket. Okay. They advertise everywhere. Okay. They own soccer in Europe. They own everything, every advertisement they could, and they make monster margins. And it took them 52 years to gain a monster position in the plastic market. That's the type of adoption we're talking about, right? And it's going to take some time. And I think that's the good news.
Yeah, no, I completely agree. You know, again, there's a lot of really great points of what you're talking about. Let's go with the idea of where we are today and these companies, as you talked about, the Fidelities, the ARK Investing, the other big, BlackRock and Invesco and everybody else is coming out here and getting the approvals for these spot Bitcoin ETFs. When we look at this, I mean, first of all, there's a remarkable point that we are one of the, this group of people that are in crypto is still a small number comparatively to the world. So when we think of that and all of us in this space, we're literally front running Wall Street. We were here before they got here, and now the money's coming in. But there's a part of me that obviously, there's good and bad. There's pros and cons. I mean, yes, this is what adoption looks like. The spot Bitcoin ETF is going to bring an enormous amount of awareness for other investors that are scared to be in this space. I, like you, do not want to bury my crypto or my thumb drive and my cold storage in the yard. I didn't want to store my Apple stocks printed out in a safe either, right? I want a custodian and insurance and be insured. And if it's a problem, the liability is on the insurer, right? That's what I want. And that feels good to me. And then I don't have to worry about somebody breaking in my house and trying to steal my thumb drive and harm me or my family. That's just my take on it. But I want others to have that right, obviously, if that's what they want to do. I don't want it to be just one way. Yeah. But looking at where we are in this space and seeing Wall Street come at this Bitcoin this way, I wonder, what does this look like? Because I tend to believe that Bitcoin being introduced as an ETF product, and we've heard Congress talk about stablecoin legislation possibly in Q1 of this year. And if that happens, I have two big red flags go up at my house. One is, yes, it's great we got the Bitcoin spot ETF, but I also see that as a potential hedge for the legacy firms finally getting to expose this asset to their clients in case they have some kind of 30-40% correction in the traditional stock market. This would help hedge it if they put 2 to 5% exposure in their portfolio. Then I look at stablecoin creation. I look at problems with inflation. Should inflation continue to run out of control and the Fed can't stay on top of it? If that were to become an issue, stable coins could play a very vital role outside of just being an on and off ramp. If we experience high inflation or even hyperinflation at some point in the future, you could see stable coins serving as a very desirable product because it's always going to be a digital dollar, which would require any issuer of the stable coin, if you're running a 2-to-1, 3-to-1 or more in a hyperinflation scenario, to hold that surplus, and you still have a digital dollar. You don't have 3-to-1 in your pocket anymore. What a great incentive to push everybody into a digital dollar should this come. It almost looks like there's these things that are being set in place. I almost look at them like little like dams, you know, like to help absorb the shock of this monetary system changing, because we really are truly changing to a new financial system.
Yeah, look, just a little something on the stable coin. First off, I think it's grossly misnamed. Okay. We should call this a linked coin.
There you go.
Just like they peg the pound sterling. You know, I've had for 30 or 40 years, I spent 15 years in England. When I went over there, the UK pound sterling was 176 to 176 to the US dollar. So you get $1.76 for every pound you have, and that now is 124, 127. The euro is 103-ish. For 40 years, I've asked economists and central banking people, anybody that would, listen to the question, why does the UK pound sterling trade at a premium to the US dollar? No one has ever answered that question. They do really weird things like, well, Gary, why do you think there's a premium? I'm like, what the fuck are you talking about, dude? There's absolutely a premium.
Yeah.
I have to pay $1.76 for every pound. And now it's 127. This country has none of its own production. It has none of its own production of food, water, or energy. Yet it trades at a premium to the U.S. country, the U.S. that controls all the currencies on the planet, and everything's tied to the U.S. dollar. I actually think stable coins should not be called stable coins, and they will not be stable if the US dollar, like we're just basically this is another peg. It's an artificial freaking peg, man.
Well, that's right.
That's all it is. It's a made up peg, and they won't hold.
Yeah. Well, it's interesting because to that point, I believe, look, I don't know whether, look, I certainly believe we're going to see some kind of correction in the traditional markets. And I look at history to see that most administrations in office will try to, underpin the economy as much as they can, doing whatever they got to, promise Peter to pay Paul, the whole thing, just to get past the election, and then everything goes to hell in a handbasket. And it would appear that we're probably going to see a scenario like that in 2025 and 26, right? So, but the question is always, yeah, right. Yeah, exactly. Right. Yeah. Got to get past that election, right? But the funny thing here is that none of us can know how far that'll go, right? Like, how deep of a slide is that going to be? Is it going to be off a cliff? Is it going to be a dip? We don't know. But that's why I say, like, I feel like seeing Bitcoin be introduced as an investment product outside of what the white paper was originally designed to do is the legacy firm seeing a way to get access to it, but more importantly, be able to potentially hedge what kind of correction they know is coming for them, because they were down on it for over a decade. And seeing stable coins be introduced, knowing full well, as much as I don't like a digital dollar, understanding stable coins can be this sponge to soak up these dollars coming back home. Everything has to be 1-to-1 or a surplus. If we were to experience any kind of heavy hyperinflation, they could be 2, 3-to-1 to make that dollar a dollar, but the ones in your pocket are worth 30 cents. that is a great driver to move the masses into a digital world that know nothing about this space, because we're already here, Gary. So it's pretty remarkable to me, this moment that we're in, because this is about traditional markets being tokenized. And you leaned into that in the first part of our conversation today. This is the larger part of where we're going. Crypto is this big of a market. It is the traditional tokenization that I'm here for, and I believe it sounds like you are as well, and finding and identifying these projects, companies, and tokens that may have the opportunity to solve a problem for filling that gap between the traditional markets and this new revolution we're moving to.
Yeah, I think, look, I think you're totally correct. I think the reason Larry thinks here is not because of Bitcoin.
Yeah.
He wants to tokenize all assets.
Yep.
And look, the truth is, most 72% of Americans own a home, and they shouldn't. Yeah. Okay, this was a banking scheme that was run on everyone in the 50s. And the only reason that real estate, my brother and I have this, not argument, but the reason real estate goes up is because the dollar is devalued year over year over year. People don't understand that. They still believe. I had ran into a woman that couldn't have been more than 35 years old, radiologist. And she's like, hey, I'm going to go buy a house, and I'm like, why would you buy a house? I mean, she believes her parents, someone told everyone that buying a home was a cool thing, and it's horrible. She is never going to own that home.
Yep.
If she doesn't pay her taxes, she doesn't own it. She's got to take care of it. She's got to maintain it. Instead of having a meeting with me, she's got to go see the plumber. These are all things that are expensive. Okay. And so, like, I own 2 homes. I shouldn't own one. And I'm probably the only guy that should own the bloody home out of 1,000 people, because I can really afford one, but it's a bad use of funds. Yeah. Especially when you have an opportunity to invest in something that actually is finite, and it can really, I mean, if you look at what my house cost me, and we go back and say, hey, Gary could have deployed that exact same money or even less into Bitcoin, I'm living in a $42 million home based on that. And like, I love my home, but it is not worth $42 million. But that is effectively the opportunity cost that I spent to live here. And I can sit here and go, well, gosh, I just didn't know, and I'm a Dumbo. $42 million versus 8 is okay, I might be able to sell this for 12 to 14 and make 6. 8.6 going to 42 million is a very different trade strategy than, 8.6 that I have to pay interest for, that also have to fix the roof. I have to insure. It's $150,000 to insure a year, assuming the insurance is available. My taxes continue, 175 grand on taxes. I've got to have somebody out here $1,000 a month just to fix the yard, make everything look nice and clean. And the bigger these properties, the more energy they take. If there's a problem here, and I'm on holiday, gosh, I got to hire somebody to come in there and fix a window because it's raining inside the house. There's just none of these issues exist with Bitcoin, or an investment that's generating a yield. Yeah. So I would say, even if you're not doing Bitcoin, the better investment would be to go into apartment buildings, rent an apartment, and then invest with somebody that buys apartment buildings and can provide a yield. And that yield, I do that. Like, I get 40 grand a month in yield from real estate investments. I then take those distributions and put them into Bitcoin or into distressed real estate that's going to pay me a yield over a long period of time. So I think the world's been poorly educated. And the cool thing about Bitcoin is really helping people understand money and currency, different things, man.
Oh, it's a great point, Gary. And to that point, I want, because this goes beyond what what you're into, and it starts to touch into the idea and understanding of what you do with your gains once you win. Right. And yeah, that's really a great conversation that usually stops short of being had by most people. So I'm really glad you brought this up. It is something I do touch on in our private group, quite often is, what do you do after you get your gains? And if you're taking your gains from your winnings in crypto and you go spend them, that's some dumb stuff right there, right? Because you need to take those gains and go put it into hard assets that are going to give you a return. Then you can live off of those gains, those constant returns of those gains. Don't go just spend your winnings. I mean, that is a poor man's plan right there, right?
Yeah, and I think also that people aren't really taking into impact the I mean, we're going to have to go back here a little bit on our earlier conversation, but the other philosophy that Bitcoiners had, and I use the word Bitcoiners really loosely, I'm not trying to smash anyone.
Sure.
I think the other theory was, well, this is a tax-free event. And it's like, hey guys, you live in the United States of America. Like, I don't know where you heard this was a tax-free event. Now, Satoshi talked about peer-to-peer. I didn't see him saying, hey, we're going to do end runs around the U.S. government and the inland revenue, and we're not going to pay taxes. I didn't read that in the white paper.
Right.
Did you?
No, it's not.
I could see how it could be interpreted that way.
Yeah.
But I'll tell you, and to me, this is a real big warning to everyone. What has happened in the last 2 months with FTX, in particular, CZ Binance, I would say the embarrassment of the guy that is running GBTC, Barry being basically asked to. Barry Siebert did not just unilaterally decide to leave the business. Okay, that is not a good day for him. So somebody cut a deal. If you were doing funny, naughty deals on Binance 5 years ago and not paying taxes, I'm pretty sure you should be really, 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 really nervous right now, because that customer list has been surrendered.
100%.
Now, people are going to, 1,000%, right? Yeah. And they're already starting to go down the rabbit hole. Yeah. I would be so nervous right now. I do not know what you guys were thinking playing on the blockchain. And nobody said anything about anonymity. Okay. Like, I don't even know how this got pitched. Correct. This is the least anonymous place you would ever want to be to do something naughty. That's going to disrupt so many people. There have been so much money made that less than 1 million people out of 52 million have paid any tax to the U.S. government on crypto. And I don't know if you know this, but all the ETF stuff, all the FASB rules, they all came with the tax rules.
Right.
And we literally now have people going, hey, look, you should be able to move more than $10,000 worth of Bitcoin without having to report. Like, why, dude? You have to report on $10,000 worth of bubble gum. Okay. Yeah. Like, it's ridiculous. Okay. Like, to think that we have to report on everything. If I go into the United Kingdom, I have to sign something. I'm not bringing more than 10 grand in here. And if I say no, they have the right to confiscate it and hassle me. I don't think that it is unfair. Now you can go argue the $10,000 rule is wrong. You're never going to win this argument. Okay. It's been in place. I don't care.
Yeah.
Like, good. Here's 10 grand. File it. Fine. So look, you're not going to be able to do wallet transfers and avoid taxation. It's not, you need to leave the country, I would suggest. And it's very telling that a Chinese national voluntarily came back to this country, walked into, security, surrendered his CEO title, agreed to a $4.3 billion fine, which is basically one box of cigarettes out of a whole carton. I mean, that's done. Yeah. Let me write a check, please. Yeah. I don't think he does any time. And, but they have the entire list. Okay. So this is now going to become a very clean business. Can't keep being run on the edges. And why we thought it was a good idea to warn everyone that we were the great Trojan horse that was going to take over the US dollar complex. I don't even know why you would say that if it was indeed your strategy.
Yeah. I mean, well,
let me poke the enemy in the eyeball 17 times. They're taking the Biden's playbook.
Yeah.
Let's go beat up Russia, right? Let's go make Putin look stupid. It's like, well, that didn't work very well because he's looking pretty smart right now.
Yeah, there's no question. I mean, he has avoided everything. Russia's stronger today than they were before the conflict. And that's just, and they've obfuscated Swift in the process. So it's to your point. But you make a great point. In 2019, I met Chris Giancarlo, the Honorable Chris Giancarlo, former chairman of the CFTC, now the co-founder and head of the Digital Dollar Project for the United States. This is remarkable that you bring this up. I met him at Bitcoin Miami in 2019, Gary. And when he walked up to me, they had this giant dollar they had hung from the ceiling that was half burned, and they were down with the dollar, it said, right? And I bet Chris that he turned around and he said, whoever put that sign up needs to take that sign down right bleeping now. And I was like, oh, yeah. Because I understand that too. That may be attractive to the younger kids, and they think that that's like, wow, that's how powerful Bitcoin can be. Understood the argument there and the point made, but all you're doing is putting a bullseye on the back of the technology. I have said from my channel since day one, when I hit the scene here, I have said, they can't stop the technology. This is true. And a million people understand that. But you know what they can do? They can tell you, I'm going to fine you $250,000 if I catch you using it. If I get you haircuts, dinner, I don't give a shit what it is. At 5 years in jail or $250,000 fine, whatever they decide to do on it, because that's how they handle shit like that. If I can't stop the tech, then let me catch you using it, right? So that's the last thing you want to do, is get a regulator or a government on the wrong side of you, feeling like we can't have a conversation about this innovation, but now I have to be defensive and try to kill you because of the innovation. And that's just been the wrong approach for so many years, which is why I'm excited in one side of me for these products to be introduced on top of Bitcoin. But knowing Wall Street and these legacy players, Gary, I come back to, okay, all right. Now, what's going to happen to Bitcoin when Wall Street's done playing with it? Because if they get done playing with it and throw it on the ground like an empty can of soda they don't want no more, that's going to take a lot of money back out of this space, and it's going to look like it lost all its value, but the tech's still there.
Yeah. See, I'm not worried about them throwing the can out. They have too much to gain from this.
The ETFs are too big.
Well, yeah, I mean, look, this is real. I think you have less than 20% of any family office that has real wealth. Less than 20% of people, probably not 12, are really in this space yet.
Right.
Look, I think we're at peak consumption. People talk about peak oil and peak all that. Dude, we're at peak consumption. Like think about these super wealthy people that have 3 airplanes, 14 villas, 32 girlfriends, like almost small armies, right? 44 different Rolexes. You get to a point, like I'm a fairly wealthy human being, you get to a point where there's just nothing else to buy.
Yeah.
Like I can only have so many bloody watches. I mean, I don't buy a lot of that. I have one car. Yeah. I see buddies of mine that, they supposedly are worth a lot of money. They do a lot of debt, and they got 12 cars, dude. And every car they have, it's like, dude, you had to lease that one too. You leased that one. And they're not leasing because it's smart. They're leasing because they don't have the cash.
Right.
$190,000 Range Rover. I mean, these are, guys that are living over their skis, in my opinion. But I'm not worried about them. First off, Wall Street can do whatever it wants to do. I have the right to leave this country.
Yeah.
And I'm not going to leave it because we voted for somebody wrong. I'm not going to do that. But if you start messing with my rights, my votes, and my money, it's not difficult for me to get on a boat and move on. Yeah. I don't want to, but I'm starting to see people consider this now as an option that they had never considered before. Just to add to that, like 88% of Bitcoin is not being controlled by Americans.
Yeah.
So you can play with this if you want, government, but it needs to be an open market. And I think you're going to see that the market will come around and treat Bitcoin as the asset it is, because it is so unique. And I kind of like the idea of having the ETF, because I think, one, it opens up a cadre, just a massive wall of funds that will participate in this, whether it's this year, next year. I mean, you can just see the way they're marketing the product today.
That's right.
It is so different than the Max Kaiser announcement,
Yeah.
And by the way, it's not the young guys that are pitching this, okay?
That's right.
It's the guys that bought 10,000 Bitcoin at $1. They have made all their money, and now they're just stirring the pot. I don't think it's helpful, okay? There isn't one industry that doesn't go through this innovator kind of Barnum and Bailey, Ringling Circus, hey, blah, 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 get all the attention. And then as it matures, the messenger changes substantially. Like, I'm too much of a messenger. Once an industry has evolved 5, 6, 7 years, you probably need to replace me as a messenger, because I'm a disruptive messenger. I'm going to come in here and drive margins and efficiency in the market. Now, when the big boys come to town, they don't necessarily want to hear, oh, Gary. They want to hear a more polished, this is just playing the game, man. Just getting people. I mean, just Vanguard doing what they're doing. This is a rigged game. Okay.
Absolutely. No doubt about it. Hey,
and they will exceed their capability. Okay. These people always go too far. Yeah.
So I agree with you, Gary. You make a fantastic point. There's a lot of demand here, and it's just getting started. Let's talk about this idea. I mean, you see ETFs, I'm sure, for other projects and tokens coming in the future as well, correct?
Oh, yeah.
Yeah.
Well,
and what I see too. Okay, go ahead.
I think, I'll be surprised if the Ethereum ETF is launched in May. I think Gensler is going to really fight that.
Well, there's problems there at how that ICO went down, right? There's huge problems there. So I definitely would like to see that accountability happen, right? I'm a believer that these digital assets in large part are not securities, right? And that you could still launch things in the form or package of a security, obviously. And I believe that's exactly what happened to Ethereum, even though I believe the asset itself is not a security. But it was certainly an initial coin offering in the beginning. And I would expect, or at least hope, that Gary will come out and bring some accountability to that network, because that was an assembly token line, right? They were just an assembly factory, just shoving out projects on top of projects after getting a free pass, Gary. I mean, it's like, what in the hell? I mean, my dear friend, the XRP GOAT digital asset investor, actually broke open ETHgate, and then I helped him launch that initial shock until it really, that initial information. And then when it really took hold and people caught it on social media, the influencers and stuff out here, the sleuths, the Twitter sleuths, they really got a hold of it and went down on it. And look, it's not to be a maxi because of that work and effort that was done by DAI or myself or the hundreds of other sleuths that have been out here now that have really brought us a whistleblower like Stephen Nareyoff, right? Shout out to Stephen. But I bring it up because that is the history of this space, right? And in fact, I don't know if you're aware of this, but Satoshi Nakamoto has been identified by the Department of Homeland Security by Special Agent Rana Sayad. I don't know if you're aware of that information.
No,
I'll send you that clip so you can watch it. It's a few years old. They actually interviewed Satoshi Nakamoto. She said it's 4 individuals. This is a special agent at a conference talking with and in front of the SEC, the CFTC, and the IRS at a conference, right? And I'll send you a link to it so you can hear that and check it out. It's quite interesting that there's that, but these agencies still act like they don't know who this is. Think of this for a moment. We're watching all of these products being launched on top of this, but let's forget the video that I told you about where the special agent says this. How do we know that Bitcoin and Satoshi Nakamoto wasn't launched by some bad actor like Russia or North Korea? We don't, right? And where is the accountability on these things? Because this is not gold that you found in the ground, right? This is a code that was created. And we have to understand that there is some vulnerability here because, the only asset that I'm aware of in the United States that has legal clarity, not regulatory opinion clarity, legal clarity is XRP, is in and of itself not a security. Now, still a question and open conversation about what it actually is if it's not a security, but that's exciting in itself too. But we have regulatory opinion from regulators that say Bitcoin is a commodity and Ethereum is a commodity. We've heard the CFTC, SEC say it. And that's an interesting point. And I don't push back on it other than I want audience to be aware that the legal clarity is not there for those two things, even though we're watching all of this happen, right? We're watching the billions and billions of dollars be launched on top of Ethereum's network, which was largely controlled centrally by JP Morgan in China, right?
Mm.
And then most of the miners for Bitcoin were in China, and then BitDeer or Bitmain came here and became BitDeer or Bitmain from China. And now they're like the largest Bitcoin miner in the United States, but they were kicked out of China. Was it BitDeer? I think it's BitDeer now here. They used to be Bitmain in China. They mine every day, 24 hours a day. It's what they do. And then they sell everything every day. Every day at the end of the day, whatever they mine, they sell. That has always been a little bit of a concern to me too, Gary, because I'm like, wait a minute. If you're believing in the long ball on this thing, wouldn't you want to save some of what you mined for down the road a little bit, knowing that you believe in the long-term go of it? But I understand they're miners, right? But it's just, because this is a new emerging asset class, we're here for something that people don't get to see in once every 4 or 5 lifetimes, Gary.
Yeah, that is a fact.
This is a remarkable moment.
10 lifetimes. Oh yeah.
Yeah.
I think this is a once in a century event. Look, the miners, the reason those guys are selling so much is their debt load is so high.
Okay.
They're not generating enough cash to pay for the business. They're probably still in debt. There's a few of them that are starting to go, okay, I'm able to pay the debt off. This is the theory why the price has to double. If you currently have 900 Bitcoin being mined, and most all those Bitcoin are being pushed in the market to generate cash to pay off the debt, which is the only reason they're doing it. Very few are holding those coins on the market. But, a lot of these guys set up debt agreements 3 years ago and they're upside down. Yeah. And they can't get new debt. Hard money debt right now is 15 to 20%. Hard money, not what the Fed says.
Yeah.
See, the Fed's numbers are bullshit. It's like, hey, why don't you tell me what the hard money? Can I borrow $100 million? What's it going to cost me? I have collateral, and you can't even get a bid from anyone.
Yeah.
So the market's very illiquid. The miners, it has not been a great business. I'm just now starting to look at the mining business.
Right.
I think the miners that made all the money were the guys that stole electricity in the first place.
Yeah. Because they were just passing the cost, right?
Hey, look at me. I'm such a hot shot, but they're stealing, they're stealing from the utility.
Yeah.
And selling and mining Bitcoin for $300. Well, power prices were exactly the same when it was $300. So I do think that Bitcoin, if we only have 450 coins being mined, these people still have the same debt load.
Yes.
So that price either needs to go up, or you're going to have the miners are going to get crushed.
Oh, that's such a valid point. That is such a valid point, Gary. You could see a lot of miners get squashed out after the halving if they can't live to fight another day. If they're producing half as much as they were the day before and their debt load's not out of the way, that could be a very, very interesting conversation. But you're right.
The price has to double.
The price has to go up
from some level. Maybe it's 30. I think 16, 15 to 30 was about getting all the bad actors out of the way. So people are saying, well, the price is going from 16 to 42. It's tripled because of the ETF. No, it hasn't tripled because of the ETF. It got back to 30 or 27.5 after you got rid of every criminal, every SBF, every Binance. I mean, basically that happened before the ETF. Why? Because we're into politics. Everybody was going, hey, we need to put all these guys in jail before we approve anything.
Yeah.
Now, you go to your comment about Ethereum being a security or a commodity. Hey, it looks like a security to me.
Right.
It smells like a freaking security, and it is most definitely not decentralized.
Yes, that's correct. Yeah,
For sure. So
it's
if
not.
decentralization is one of the categories for commoditization, which I don't even know why that would be, but you don't treat the oil companies that way.
Exactly.
I don't think any of those things are commodities. XRP is it's going to be a technology that allows the institutional bankers to basically use that switch for high volume transactions, but that's not a commodity.
No.
Like that's a bloody security, dude. It looks like a stock to me. It doesn't look like, but because they set up as a token, this may be the issue. I mean, I hate the token business because it's kind of like, you guys want to raise $1 billion for a new business and all the insiders get the juice.
Right.
Just for showing up to work.
Yeah, just for coming in early, right? No, I totally get it, Gary.
Maybe not even coming in early. And,
Yeah.
and their whole time is less than a year, man. Okay.
Maybe not even coming in early.
Like, dude, like there's the responsibility. Then you start looking at, hey, what would happen? Like, I don't own any Ethereum. I know everybody's telling me Ethereum's going to rock and roll. A 30-year-old kid runs the show, dude. Like, for me, it's like, whoa.
Yeah.
We know where he is. They can send him a notice of cease and desist. They can send him audits. Like, I love the idea of like, if I'm going to do that, I might as well just go invest with Visa because I know Visa can put up with it all.
Yeah.
They can spend the money to defend themselves. These small companies can't.
Yeah, no, that's a fantastic point, man. It's funny what you bring up about the idea a lot of these things look like securities to you is that, during this case, when this case was going on with the SEC versus Ripple, obviously it was a heavy conversation on this channel. We were forced to look at the idea of there being a bond designation. Right? Because a lot of these products look like a bond, a bearer instrument to me is what they look like. Right. And in fact, for those in the audience that are not aware, bearer instruments are essentially like bearer bonds really were outlawed in late 80s here in the US because you couldn't identify who had them and people were using them for great tax avoidance, right? So they were hiding their wealth in these bearer bonds, right? And then nobody knew it. As long as you're holding it, you own it. If I drop it on the ground, you pick it up, now you own it, right? Yeah. So that's kind of what this is. You find my thumb drive, you own it, right? That kind of a thing. So it's just like a digital bearer bond instrument is what it looks like a lot. So it's hard to say if this conversation is truly over. And, when it comes to the space broadly, and something I wanted to say about that is I've often thought because we saw the SEC sue Ripple over consensus federated Byzantine agreement and that process that they use, I expect to see Ethereum become a target because of the way they ICO'd, for one, needs to be dealt with and held accountable. Number two, it's proof of work that went to proof of stake. So there's a technology there. Then there's proof of work that needs to be dealt with. That could be Bitcoin, it could be Litecoin, it could be something else, it could, something with proof of work. But the point is all of these different technologies of how they compute and solve become where you fit in a legality bucket. That's what I see happen. They target one of these particular kinds of technologies, and then they're going to sue it and get legal precedent one way or the other. And then when they get the main coverage of these things dealt with by a regulator in the courts, then you're going to see the legislation come out based on the precedent set by these rulings. That's what I see taking place. Your thoughts?
Yeah, I think it could be very much like that. I don't really think it impacts the user so much as the I mean, I just think people are putting investments in things they don't even understand. Like there's just no clarity. I'm surprised that they're doing that, but I'm pretty certain that high net worth individuals, families are not going to invest in these products that have so much uncertainty.
That's
Like,
right.
like we need to get some clarity. I think the piece people forget, somebody that's worth $100 million doesn't need to do anything.
That's right.
They're not going to die if they don't get on the XRP train
Yeah.
and gobble it all up tomorrow morning. Like my brother's like, bro, like, you know, people are like, you should move all your investments into Bitcoin. He's like, sure, dude. I spent 35 years building a multi-billion-dollar portfolio, and I'm just going to turn now.
And just
And,
turn away from it all, right? You know, all your
and
knowledge, all your work, all your effort, everything you've done, and you're just going to turn away from it. And you know, one of the quickest ways to lose money and go broke in this world, right, is to change lanes and to get out of the lane that you got good
totally,
in,
dude.
right?
Totally. More people lose money changing lanes,
Yes, sir.
getting greedy, thinking, hey, look, I'm going to go fast, realize, uh-oh, shit, there's a reason nobody's in that lane. I just got in a wreck. Yeah, it's true, man. It's true. I mean, it doesn't mean that you need to get in the longest lane, but
That's right.
I see so many people get out of their lane. I actually am thinking about building a business course, and a key operating principle would be, you know, danger of what I call the glittery object syndrome.
Yes.
In these new businesses, man, there's always another idea. Oh, look at that. Look at that. Look at that. Look at that. You know, and then you go chase it, and then you're off your core perspective, trying to do too much. You do too much, and then you provide too little exchange for your counterparty, and they get pissed off at you, because you just didn't have discipline. Your base thesis. You know, my base thesis on Bitcoin had nothing to do whether there was an ETF or not.
Right.
Zero. And my base thesis has not changed. And in fact, I would say that I'm probably now starting to look to, this is going to be the next buyer of Bitcoin, bro. It's going to be the Bitcoin holder who now invests in the ETF. How
That's right.
weird is that? We're going to go into the ETF. Watch. I'm going to look at this and go, shit, I think the ETF might outperform.
Yeah.
It could.
Yeah.
It
I
could.
could see it because it's
If
safer.
they
It's
don't have
more
to settle
perceived.
every day, if they don't have to
Absolutely.
settle every day, they're going to be trading this book like a monster.
Oh, 100%. I can see that, Gary. I think that's a fantastic point. You know, I can call up my broker. I already have an account there. Double me in, get me heavier, right? All of that stuff. And then you get this big, because they have the structure of investor protections built inside of the ETF offerings, right? So they feel like they can get all of this exposure with more security and investor protection. So why wouldn't it take off, right? I mean, I totally see that happen. Look, I mean, to your point, look at gold, look at silver, look at oil. All the paper products that are introduced on top of the asset are 5 to 8 times larger in size than the actual commodity that's traded underneath of them.
Right.
Yeah.
Yeah.
Big point there. Big point.
I mean, look, has there ever been an ETF launched in the last 100 years that failed?
No, not
I
that
mean,
I'm aware of.
some of the competitors, but we have
Yeah.
gold, we have silver. We have the same thing with gold.
Yeah.
They're going to come and take it. They don't want you holding the gold on your own books. Okay, well, come find them all, dude.
Yeah.
Okay. That's like saying you're going to go find every weapon in
Yeah.
American homes. I mean, good luck on that one.
Yeah.
It's just not even. I actually think I'm going to start really looking at, maybe I pay the fee to somebody and start investing in the ETF. If you start thinking that way, you realize, wow, no ETFs have ever been launched and just failed. Like maybe there's one or two winners, but
Right.
that's interesting. I bet that the Bitcoin world is going to go away because we got BlackRock in it. No, the Bitcoin world is going to expand.
Yeah. No, that's a fantastic point. Gary, let me ask you, because I know that we've been at this a minute, man. I've loved talking with you. I could just continue on. And one day I got to come down. I love Florida. I got to come down there and just see you. We'll do this at your joint.
Love to have you, man.
Oh, man, it'd be great. But it's not a fair thing to ask, but what does this market look like to you 3 to 5 years out from now? What are you seeing?
I think that, I mean, everybody wants to talk about price, but 5 years from now, I could see, look, I could see a 5x on the price in 4 to 5 years. I don't see the price sitting here doing nothing. If it does nothing and the US dollar continues to degrade in value, or the eggs that I have to buy at the store continue to go up in price, I may actually be okay with Bitcoin just staying where it is. Okay,
Right.
just like I was in gold, I'm not massively upset that gold only moved from 2008 to 2023 by $800. It wasn't a massive return. But people like me don't pick tops and bottoms. I'm not a professional trader. I'm an investor. I think the time horizon for most people in Bitcoin is stupidly short. They're using too much leverage. And the way I know that is because, you know, when they have a real estate holding with my brother, they're not looking at the stock price every day because there is no stock price.
That's right.
That's the beauty behind real estate. It's really not very discoverable of what your own investment is worth. You don't get a margin call ever. You might breach covenants and have to puke that asset up because you don't have the right debt structure. But, you know, look, they're going to flood the market with US dollars.
Yes.
And if they don't start, it'll be because China flooded the market with yuan. And if that wasn't enough, then the euro will flood the market with new nuclear dollars so they can nuclearize their entire continent because they're completely fucking busted up. I mean, they have no energy. Somebody blew up some pipelines, and now the United States is selling electricity and nat gas to the Germans at about 400% more than the Russians were doing. Oh, their bills, the United Kingdom, the Joe consumer in the United Kingdom has doubled 200% their bill.
My God. How's anybody making it?
Germans are striking, man. Okay, they're saying, hey, knock it off. We're paying $2,000 a kilowatt. That's 4x what they were paying. And you're telling us we can't work. And you're telling us that, and we have this immigrant issue, migration issue. They will riot. I mean, I predict this year, I was making a funny with you about, hey, we're going to have an election. I predict this year, either Europe or America or both are at massive civil unrest where you have people doing crazy things.
Well, you know, yeah, it's something to be said to your point too, Gary, no doubt about it. I mean, if things go too hard one way or another, you know, you're going to see good people do bad things. And that's a damn sad commentary, because when good people start to do bad things, you've really lost a foothold on a society's, you know, basic fundamentals for sure.
Yeah. Yeah. Well, I mean, they're just trying to survive, right? And it is the governments that have put all this in motion. These people, you know, you got 12 to 20 million people leaving the Ukraine. They're women and children.
Yeah.
Who's going to feed them?
Yeah.
Who's going to house them? Where's the water going to come from? And by the way, that's before we get to the assimilation problem of putting a bunch of people from Eastern Europe or further into a European complex that is never assimilated well.
That's right.
It's horrible assimilation in Europe. I mean, it's not worked. And so you're seeing all these draconian 20th century constructs come in from people on top saying, this is what we're going to do. It's all going to break.
Yes.
Okay. Because this is why I started the show with you the way I did. I just moved from disruptive event to disruptive event. The actors always behave exactly the same.
Yeah.
Doesn't matter what the industry is. Oh, natural gas, electricity, crude oil, payments, credit cards, or Bitcoin. See, they're all the same people with all the same consulting firms, and they're holding on to analog. And so if they all do the same thing in every disruptive moment, and it's never, ever worked before, this one's not going to work either. In fact, this one will fail more because those other markets that went through change, they happened in Western countries. They didn't happen in China. There's no Visa credit cards in China, man. Their adoption rate for Visa and MasterCard looks like this.
Yeah.
Fuck off. We're not doing business with you. Okay. And then China can't come here because the regulator protects Visa and MasterCard with some bizarre rules. So this is my long-winded way of saying, hey, the world is changing. And the players that came into this, they're not changing. They're trying to hold on to what they used to understand and the systems that were built for that old analog world, man. This is like putting a Ferrari on a farm lane and on gravel and saying, hey, and don't go more than 20.
Yeah.
Well, the Ferrari isn't going to run well at 20. Okay. It needs to run at 90. But it's not going to do well on the platform. There's going to be so much friction. And that's what we're seeing. So I'm very confident that technology will win the day. Transparency will win the day. The only thing that you and I need to really, really be careful of is that we're not censored.
Yes.
If we're censored, it's game over, man.
Oh, Gary, I mean, well, you hit it right where it is. It is game over. And to that point, our channel here and a digital asset investor who I mentioned earlier, just a month or two ago, was victim of being censored for no rhyme, no reason on X's platform. I have dealt with censorship issues on YouTube's platform. I have learned that you got to be a good communist if you want to learn how to be on that platform, because there's certain topics you can't even touch without getting the artificial algorithm. That algorithm and artificial intelligence will pick up on a thumbnail, a title, something you said. They'll go for a keyword. That AI goes across you, and next thing you know, your money's jacked up. It's unbelievable the kind of systems that are in place through our main hubs of communication and sharing information on social media and YouTube. So, Gary, what a great point to finish on. I want to final thought this thing to something you said earlier, which was people often overestimate what they can do in a year, but underestimate what they can do in 5, maybe 10 years. And you had spoke to that more so, pointing about the actual space and what people think will happen in a year versus 5 or plus years. And I just think that's something to really leave this conversation with, is that there's so many young investors out here, or even if they're older people, but they're in this space because it's high risk and they're trying to make up for not investing for the last 20, 30 years of their life. Because there's a lot of those people in this space too, right? And I hope that they understand that. Really drill down on the things that you're invested in. Really drill down on the things that you believe have a chance to disrupt and grow, because we are for sure at a place in time where we have put ourselves before Wall Street. We have put ourselves before the growth of an industry, but you got to do the work to make sure you put your money in the right rivers. Make sure you got the nets in the right place. Gary, your thoughts?
Yeah, the way I would look at this is investing and understanding this space shouldn't be fun. When I hear guys saying, hey, look at this crypto thing, this is fun. It's like, dude, this is not a playground. Okay. This is not a date, a one night stand. This is, you're investing for wealth generation. And the people that say, hey, isn't this fun? Or, hey, you're trading $1,500 on XRP for a $4 swing. Guys, that's not trading, okay? Go get a job.
Yeah.
Go get a job and invest in the ETF. Like these people come on and they have an opinion, and it's like, well, me and my brother, well, how much Bitcoin do you own, dude? Oh, I can't tell you that, man. Really? Well, you just told me that I should invest my entire net worth into Bitcoin, but you're not willing to tell me how much you have convicted with your own. You got $1,200, dude. That's what you're embarrassed to tell everyone. I mean, some guy that speaks on Mario Spaces the other day going, this Bitcoin's a piece of shit. And I'm like, bro, you have like less than $10,000 on Bitcoin. Like, why are you even talking about it? Unless you're jealous and you missed out, or I don't know what the deal is.
And if you believe that, why are you even putting your 10 grand in it?
Yeah. But look, it shouldn't be fun. Long-term investing. In fact, I'll end this way. I got to do another one of these in 10 minutes, but the greatest investors in the Fidelity Fund, do you know who those people are? You know, the old Peter Lynch Fidelity Fund, right?
Yes.
The greatest investors in the Fidelity Fund are dead people. They died with the fund open. They made no changes. 20 years later, they made more money than all the smart traders, trip traders, tax harvesting players, dude. They just kept rolling. So I think there's something to be said for that. If your time horizon is correct and your allocation is correct, you should never be panicked over Bitcoin.
Yeah.
It does not require you to look at the chart every day. You own a house, that was a bad investment, but you do not look at the price every day and constantly go, should I liquidate my house? Should I liquidate my house? You shouldn't have bought the bloody house in the first place. But you're in it now. Okay. I think you make money one time on your real estate, and that's the moment you buy it. If you bought it right, you're probably going to make some money. If you didn't, you're going to get hosed.
Yeah.
I think, the Bitcoin scenario on a finite supply. I mean, look, I can build a case, dude. The ETF is going to be worth a lot, and having your own physical supply, that will trade at a premium one day, a massive premium. Whether we're going to be around or not to be able to enjoy that premium, that's a different story. But the only other thing I would say is that people that can invest in Bitcoin, but they like this space, you should be looking at getting into the industry with a job. There are millions of jobs for employment here, and it doesn't require a college education. It doesn't 18-year-old person can pop into this game. If you can read, write, and show up on time, like I can hire 15 people right now.
Yeah.
Okay? Now, you're not going to get paid $200,000 to learn something.
Yeah.
You're probably going to have to come in as an apprentice, but that's an awesome opportunity that people aren't talking about, more so than the wealth generation just over the coin. It's like an intellectual wealth event that could happen over 3 or 4 years. So to me, that's the greatest opportunity.
Oh, what a remarkable point. You can become a field general in this space. If you
Sure,
get in as a ground infantryman right now with the knowledge that you have in this space, you could find employment. You're absolutely right, Gary. That is a fantastic point. Never stop working on you while you never stop investing in your portfolio and yourself in your own life. No question about it. Gary Cardone, ladies and gentlemen. Gary, don't go nowhere. Thank you for being here. I hope to have you back real soon. And I want to talk to you about something really special as soon as we end this right here. Thank you so much.
Thank you. Thank you. Love being here, man. Thank you.
Thank you.